Let's talk about LLP versus LLC. I mean, you hear LLC a lot. Everybody knows LLC, at least nearly everybody. But what about LLP? Let's have a conversation. Let's have a compare and contrast between those two legal structures for your business. So let me give you the overview here. I want to first start with the LLC. So what is a limited liability company? So LLC basically is an acronym for limited liability company. So it is a type of business entity that combines the tax benefits of a sole proprietorship with the personal liability protection of a corporation. So this is kind of cool. And I want to say that when we talk about LLC, everything happens at the state level. So you have to actually form your LLC in a state where you are at, or where you are currently living, or in the state where you want to form the LLC. In other words, you can be in New York and say, you know what, I'm going to form my LLC in Delaware, or I'm going to form my LLC in Wyoming. I'm going to form my LLC in New Mexico. Now, one thing I need to say here is that since an LLC is its own legal entity, it can take on business debts. You can apply for a business credit card. You can apply for a business line of credit. You can actually sign contracts at the business level. And the LLC can own property and have a bank account without attaching any liability to its members. And the cool thing is, LLCs are common among small business and entrepreneurs because they offer tax benefits and liability protection without the formalities of a big corporation. So that's for an LLC. What about LLP? So when you hear the acronym LLP, I want you to think about limited liability partnership. So this is a type of limited partnership that can usually only be created by licensed professionals such as attorneys, accountants, or architects. Since this is a partnership, owners of the LLP are called partners, unlike owners of an LLC being called members. And LLPs are common amongst licensed professionals because they offer protection against liability arising from negligent business partners as well as business debts. So this is really important. So again, in those two cases, you have to think about negligence, liability. Okay, you want to have a protection of personal assets. Very important. By the way, boss, welcome back to the show. It's really a pleasure to have you here. We're going to have a quick conversation about LLP versus LLC. Let me quickly go into the review here. I want to compare and contrast LLCs versus LLP, and I want to look at the several work streams that really will define these two business structures. Let's first talk about the formation here. So LLCs can be formed by anyone who files his or her articles of organization with the Secretary of State. Each state has slightly different requirements for a business formation. However, you will usually be required to appoint a registered agent and obtain an EIN from the IRS. Okay, so even if you are a single member LLC, you will still need to actually get an EIN from the IRS and appoint a registered agent. You can be your own registered agent, by the way, or you can actually have someone within your state or outside your state. You have national registered agent services that can really take care of everything for you. So that's for LLC. For LLPs, in most states, LLPs can only be formed by licensed professionals. Each state has its own list of licensed professionals that can start an LLP, but it's usually restricted to attorneys, accountants, architects, doctors, etc. A key difference in forming an LLC versus an LLP is that you can form a single member LLC, but not a single member LLP. You will never hear the term single member LLP. This is because LLPs are a type of partnership, so there must be at least two people to form a partnership. So that's for the formation. What about the management structure? The management structure of an LLC is outlined in the operating agreement, where you will choose to be a member-managed LLC or a manager-managed LLC. And member-managed LLCs share the decision-making responsibilities among the business owners. And in a manager-managed LLC, the members will appoint a third party to run the business. So this actually allows members to have a more passive ownership since they don't have to be involved in day-to-day operations. So now this is for LLCs. What about LLPs? Well, LLPs dictate their management structure using something called a partnership agreement. In most states, an LLP must have a managing partner who is ultimately liable for the actions of the partnership. there is no such requirements for LLCs in any state. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about LLP versus LLC. So I explained to you the differences when it comes to formation, when it comes to management structure. Now let's talk about differences when it comes to liability protection. So LLCs generally offer a more complete protection from liability protection. Personal liability, that is, than LLPs do. Let me repeat that because this is an important sentence here. LLCs generally offer a more complete protection from personal liability than LLPs do. So if you have an LLC, it doesn't matter if you are a single member LLC or a multi-member LLC, you will always have, all things held equal, a higher level of personal liability protection than if you were to have an LLP. Members of an LLC are only liable for their contributions to the LLC. That's because an LLC is a completely separate entity from the members who created it. This means also that debtors, in other words, creditors, will only be able to reach the LLC's assets, not the members' personal assets. This is for LLCs. What about LLPs? Now, the situation is a little different depending on the state you're in. In some states, LLPs can offer you the same limited liability protection as LLCs. However, other states limit the protection to liability arising from the negligence of your business partners. That's why LLPs are especially useful for professional businesses like law firms. Keep in mind that partners in an LLP are still liable for their own negligence, so it's important for partners to have their own malpractice insurance despite the limited liability LLPs offers. In other words, you want to actually have several layers of protection here. You can't just say, you know what, we are in an LLP, so we're good to go. No. You can be in an LLP, but if something were to happen, let's say you were grossly negligent, stuff happens, nobody's perfect, stuff happens, and you get sued, the LLP will protect you, but if you have malpractice insurance, that will be even better, okay? And in some cases, this could be called errors and omissions. So E&O, if you have a E&O insurance, at least you'll be covered. Then that's what you want. And so another thing is that you have to understand, if you open a business, or let's say if you enter a partnership, you do not want to lose your assets. This is not the name of the name of the deal here. You want to actually provide value, but you also want to make money, but you do not want to lose so much money. Okay. Let me talk to you about taxation now. So as you can see, boss, I'm actually trying to explain to you here the different layers of contradiction. Let's just say comparison between LLP and LLC. So I explained to you the differences when it comes to formation, when it comes to management structure, when it comes to liability protection, and now I'm going to explain to you the differences when it comes to taxation. So let's first talk about LLCs. So in terms of taxation, LLCs are flexible because they do not have their own tax classification. So one way the owner of an LLC may choose to be taxed is a C corporation. However, this subjects the LLC to double taxation. Double taxation is when the entity pays a corporate tax and the members pay personal income tax. So LLCs can also elect S corporation tax status. By the way, though, if you're an LLC, you can be anything. You can elect to be taxed as a C corporation, as I just said. You can elect to be taxed as an S corporation, but if you don't do anything, you are considered a disregarded entity. In other words, you will have to. But the default tax status here is a sole proprietorship. But if you do not want to have a sole proprietorship tax status, you need to file something. You need to file for a C corporation tax status or S corporation. Okay, so really important. So now a lot of entrepreneurs, if not all entrepreneurs, do not want to be an LLC and file for a C corporation because of the double taxation. Okay, and so the thing is that you need to understand, a lot of business owners who are LLC members, they just go with the default phase, which is really like sole proprietorship. One thing I want to say here is that Both sole proprietorship and partnerships are considered pass-through entities for tax purposes. This means they do not pay corporate taxes. Instead, the tax liability passes through the entity and lands on the individual members. Those individual members must then report their distributions from the company to the IRS on their personal tax returns. So that's for LLCs. Let's talk about LLPs. Unlike LLCs, LLPs cannot choose to be taxed as anything other than a partnership. So their only option is to be taxed as a partnership. In practice, this doesn't make much of a difference because it's usually the preferred tax structure anyway. So they cannot say, you know what, we want to be taxed as a C corporation, like we're an LLP, but we want to be taxed as a C corporation. No. We're an LLP and we want to be taxed. We want to file form 1065. So and that's it. And with all the schedules K1. By the way, boss, I want to quickly remind you of today's topic. We're doing a quick compare and contrast between LLP and LLC. So here is the decision-making process here. So let's talk about choosing the best option for you, LLP or LLC. As always, the best option will depend on the circumstances surrounding your business, right? So first of all, your business and your geography, the state you're in right now. But there are a few questions that I can really give you that will guide you in terms of determining the best tax structure and legal structure for your organization. So I want you to ask yourself a few questions here. Number one, does my state allow me to form an LLP? Remember, not all states actually will sort of condone or tolerate this LLP tax status. It's more of a LLP legal structure. Okay, so does my state allow me to form an LLP? Basically, this is very easy. Just go to your state tax authority's website. It can be the Secretary of State websites, and you look for the legal look for the types of legal types of business. You can see if you have LLP listed in there. If it is, then you know, yes, they do allow it. Number one, am I starting this business with more than one person? Remember, if you want to be an LLP, you need to have at least two people in the business. So if you are starting a business with only you, no matter the credentials you have, you can only be an LLC. You cannot be an LLP. And the third question I want you to ask yourself is, does my state require LLP owners to be in a profession that requires a state license? See, the importance of state licensing is really critical because states wants to make sure that partnerships are really partnerships are formed around very specific categories of professions. And the fourth question I want you to ask yourself right now is, am I a licensed professional? So if you answered yes to all of these questions, let me repeat the questions. We're going to put these questions on the screen. Does my state allow me to form an LLP? Am I starting this business with more than one person? Does my state require LLP owners to be in a profession that requires a state license? And the fourth one is, am I a licensed professional? So if you answered yes to all of these questions, those four questions, an LLP is likely the best option for your business. However, if you answered no to any of these questions, you likely cannot form an LLP. In that case, your best option will be to form an LLC. Let me give you a bonus here. There are certain questions that revolve around LLP versus LLC. And so why would you choose an LLP, for instance, over an LLC? And this is an important question because let's say you are in those quote unquote designated professions. So you just ask, like you are an architect, you are a nurse, you are a doctor, you are an accountant. You're just trying to really find out whether you should choose an LLP over an LLC. The thing is, unlike LLCs, an LLP will allow some limited partners to be passive owners with lower liability and no management responsibility. So you kind of have this sort of operational flexibility that some LLP members really, really love. And there are many other considerations that will depend on your state laws. And if you have any questions, just let us know in the comment section. We'll let you know based on your state what kind of legal configuration you have. Let me give you an example. It may be more expensive to run an LLC than an LLP in your state. Additionally, some states will not allow professionals to form an LLC, in which case an LLP is the far superior option than any other kind of practice or like partnership, since it really offers at least some liability protection for your partner's negligence. So when we I want to talk about another concept that is kind of related or correlated to LLP. That's LP. So what is the major difference between LLP and LP? Well, LP, for shortcut for limited partnership, consists of at least one limited partner and at least one general partner. A limited partner acts like a silent partner, and so he or she enjoys the same liability protection as an LLC member. This means what? It means that limited partners are only liable for their initial contribution to the business. However, those limited partners can lose this protection by being too involved in managing the business. If so, they will be treated like a general partner, which means what? It means that they will be held personally liable for business debts also. So you can see that the difference, like this extra L, this extra letter, this extra acronym, it's just the level, if you will, or the degree of a liability. Okay, so those are elements you need to pay attention to. So if you really want to limit your level of personal liability, then just do not get involved too much. If you do not get involved, you are good to go. If you're able to limit your contribution to the business, you are good to go, and you are not going to have you're not going to face any situation at all. And one thing I want to say also is that you need to understand, when people talk about LP, there was a third company, or a third type of company people talk about, and that's PLLC. What's that? Let's talk about it. PLC stands for Professional Limited Liability Company. So this is basically a specialized type of LLC used by certain licensed professionals in many states. Like LLCs, a PLC is governed by state law. So each state has different requirements for who can start a PLC. However, it is actually essentially an LLP with the LLC structure. In other words, your PLC must offer services that require a state license, but you can start one with only a single member, not a problem. And so what are the different types of LLCs here? So there are 6 to 8 different types of LLCs that you can create depending on which state you are in. And each LLC type can be classified further as either being a single member LLC or a multi-member LLC. So the types of LLCs include domestic LLCs, foreign LLCs, series LLC, low profit LLC, anonymous LLC, family LLC, professional LLC. You have a lot of them. And we actually have an entire show that will cover all those types of LLCs. So please be on the lookout for it. It will be fantastic. Thank you so much for your attention. I really appreciate it. In today's conversation, I spoke to you about LLP versus the LLC. So I give you the overview, the review, the decisions, and the bonus. Thank you so much. God bless you. I'll speak to you another time. But until then, remember, stay marvelous.